The big story right now is the potential government shutdown. Basically, if Congress doesn't pass a funding bill by October 1st, parts of the government are going to close, and that really matters because we might not get some of the economic reports that usually drive the market. And jobless claims and the monthly BLS report could be delayed depending on what does get funded, but we are still going to get the ADP and JOLTS report regardless. But again, the BLS jobs report, which is the big one, might not be available next week, and that's important because that number plays a big role in how the Fed makes decisions, and without it, there's going to be more uncertainty. On inflation, the Fed's favorite measure of inflation is the PCE report, and that came in right about as expected. Inflation is still running hotter than they'd like. The Fed would like, obviously, sitting about a full percentage higher than their 2% target. But if you strip out some of the quirks in the way that that gets measured, like shelter costs that are clearly overstated, like we've talked about, portfolio management fees that aren't really inflation, plus we've got a short-term hit from tariffs, so really we'd actually be right near the Fed's goal based on real-time numbers. But the problem is markets don't trade on what-ifs, they trade on the official numbers that come out, and with that, rates haven't really moved that much this week, and it's unlikely that we're gonna, see significant improvement without weaker jobs numbers. Consumer spending still holding up, outpacing income growth, which does keep the economy afloat, but it also drives inflation pressure higher, and savings rates as a result are at some of the lowest levels we've seen in a while, which just isn't sustainable long term. And it's really amazing that we continue to see strong consumer spending with credit card debt at historic highs and such low savings rates, but we're just going to have to kind of wait, watch, and see how long this can continue. Looking ahead, next week is a busy one. We've got pending home sales, home price appreciation, and it is jobs week. But again, depending on whether the government shuts down, we might not see all the jobs reports. Unfortunately, we haven't seen inflation numbers break much lower. The labor market is softening, and hopefully we will see more of that next week. And, rates have pretty much been stuck moving sideways, but as always, you can expect to see some daily swings, but no real major improvements until we start getting a weaker jobs number or lower inflation readings. So have a great weekend, and I'll be back next week to break down how it all plays out.